Hey everybody, welcome back. Well, we have a lot to go over between what the S&P 500 is doing, the NASDAQ, Apple exploding after hours. We're going to explain why and what to expect for tomorrow. Coin imploding after hours. But we have a lot to go through with non-farm payrolls and some super technical levels. And is there going to be follow through and which way there's going to be follow through? I think we've got some pretty significant answers here that we can go over and get you guys set up for tomorrow pretty nicely before non-farm payrolls. So let's get into it. So first and foremost, we can all see this particular pattern on the ES. And if we just look at this, we can just kind of get that, right? Just clone these. You always want to clone them. And you just take a look at that. All right. So we have this wedge in here. And if we just come here and draw this down, we can all see that pendant pretty clearly in there. So, and I think it's important just to note when you see these patterns, you just take a second, click this off. It's really very helpful. Just go, oh, okay, it's one of those. So you know what's going on. Does that mean it's going to execute? No. And we're going to have to get into what's going on under the hood here today. We have to spend some time on that because there's this extremeness that I see going on. And people need to get that this is not extreme, this is nuanced. And we have to talk about why things are nuanced. There's a lot to it. And I think that this will be really helpful to people to start wrapping their head around exactly what's going on out there. So we're going to dive into that a little bit right now. Before we go any further, there's several things that you would have to look at with the S&P. And we're going to flip to this for a second versus looking at the futures for a couple reasons. But let's just look at the most basic of indicators. And we're going to see the 12 is going sideways. The 22, 55 crosses right here. I use a 12, a 22, and a 55. You should use what you're comfortable with. Okay. And I did get a question about why do I use these? So we've been growing as a community. We've really only been doing these for about 2 years, 2.5 years, I think. Actually, probably, closer to 2.5 years at this point. When I hit 25,000, I'm going to just do an open Q&A comments. So if you have any comments or things that you really want to know, just drop them in the comments and then I'll get to them because I'm going to just do it all in one long video, and answer all these questions that you guys keep having because we never really have the time to answer them all when we do the pre-market live. So I thought that would be helpful. Now, 12, 22, 55, I will get into why I use those in that. But again, if you have more questions, please throw it in there. What we want to do next is just extrapolate this out. And by doing that, we just want to go to the next level and drill into the 15 minute. So the 15 minute is going to tell us with the 3, a 5, and an 8, what's going on with the S&P. And what we can see is we can see the slope still here and how we're breaking and how we're fighting that 5 still, and we're still unable to get above that. So they are pointing up, but they are not able to flip. And I think that's a very important distinction. So do we see a reason that we need to do anything here, that anything's changed? No. By the moving averages, which are lagging indicators, no, I do not see the reason to do anything. But there are some things that we might want to look at. I use a chart that's just, I call it the 4 horsemen. And the reason I do that is it just gives me an indication of what's going on with varying oscillators and indicators all in one shot. And it's real simple, right? What they are, okay? It's just MACD, and this is rate of change. And then what we have down here is RSI with a line, and I use the line in the break of the line. And then I have stochastics, all right? And what we're going to focus on is a couple things. Number one, what we're going to focus on is not so much stochastics tonight, but I just want to point out that if we take a look at the S&P and we look at the RSI, you're not overbought by any stretch. You're kind of oversold and you're in that neutral position. So we don't really have much that we have to focus on there. So then we would just kind of keep going. Now, the MACD, I'm more interested in the histogram on this. So what I would do is if I just drop this down for a moment, let's see if they'll let me do it, and just flip to that really quickly. And yep, they'll let me do it perfectly. So I'm going to get rid of that signal line, and I'm going to leave this in for a second. But before we even go there, there's some other things I want to discuss. So I'm going to shrink that down for a second, and I'm going to blow this up. And what you're seeing right here, just so you can see, is rate of change. And it's ROC, rate of change. Now, here's where this gets interesting. Rate of change was below 0 and negative. It is not realistic to have a positive rate of change, which we bounced, okay, yesterday and today, and then for the market to not go sideways to up. It's just not realistic. A matter of fact, there's very few times on this chart where you're going to find that this is pointing up where the market is not pointing up. And why is that? Because rate of change calculates exactly what it's stating. It's stating the rate of which things are changing. You might not see the change because of how you're looking at things, right? So you might not see the change because you're not looking at the internals, but rate of change calculates that if you go and take a look at the equation. I'm not going to bore you with the equation, and I'm going to spend time on the S&P. We're going to look at the NASDAQ a little bit. But I want to focus on this because this is important. So then you go, okay, so the rate of change is positive And that would just make sense that if the rate of change is positive, then that could be positive. Then we're going to go drill into this a little bit more. Well, what's going to give me an indication more? And I explained earlier last week that when you start to have a change in color in the histogram, where those two lines, the signal line and the MACD, are getting close together, that's usually a sign that you're near a bottom. And what a coincidence, you've never broken since that, right? And you could just go through these again and mark them yourselves. But that in a bowl of soup, what's it getting you? Well, it's getting you that the market's going sideways. It doesn't mean that the market's not going to roll again. Here we flipped, and that went sideways for a while until this gave way, and then we took out the low. So it doesn't mean that a, quote, bottom's in, but it does usually mean that the sellers are exhausted. So then what we want to do is start looking at something else that's going to tell us more about the internals. Now, in front of us is a screenshot from marketinout.com. It's a free site. I'm always looking for free sites for you guys. I should probably put a whole newsletter together of just free sites. But what you're going to see right here, okay, is the S&P. Here you go. And below is the McClellan oscillator, right? And what this is going to determine is this is going to give us more of the internals. What's going on? New highs, new lows, that kind of things. Advanced decline line is another one thing that you would want to look at. I'm not going to go through all of them tonight, but what this is going to tell you is here's your oscillator, and that kicked in right around the same time. And then you can start seeing how we're going sideways here. Does that mean you're out of the woods? No, it does not mean you're out of the woods. No different than when you were hitting lower highs here, that meant you had to get in right away, but you knew eventually that was probably coming, right? So you can see that. And we can spend more time on this later. But this is telling you that we're a little exhausted on the sell side, and there's some other signs as well of that, okay? And I think that's very important for us to get, because what tends to happen here is people go to extremes and just, oh, we're cracking, so therefore everything's in ruins, everything's in tatters, and we're definitely going to crash. There seems to be, since the pandemic, either full blast on or full blast off. And that's not the way the market works. Let's take a look at the NASDAQ for a second. Now, if we look at the NASDAQ and we look at the NASDAQ 100, what we're going to see by looking just at the McClellan oscillator, and you look right down here, let me get my fancy little pointer. I'll just click on it right here so you can see where I'm at. And you can see that you're turning green. Well, that's the McClellan oscillator right here. And this was your low, and you're turning green. So what does that mean for us? The advances are going higher versus the declines, which is what McClellan's calculating to an extent. It's more to it than that, but that's pretty much it. They just do it with a moving average. Then we know what's happening here. And we know that what's happening is that we're getting a little exhausted on the selling side. Does that mean you have to rush right in? No. And this is where the nuance is really, I think, where people are getting hurt. They're trying to look for certainty when you don't have it. Because you're looking at this and saying, well, clearly we need to short. Do you? You're below the 55, you lost institutional support. Here you are with the 12 that seems to be going sideways. The 22's right here. So how I view it is, yeah, we lost institutional support. Yes, the bears are definitely in charge. Do I want to start looking at swing trades? I am starting to get above the 12, which means I want to start looking at swing trades, but the bears are still in charge and I don't have institutional support. This is getting worse. Now, this is very different than saying, oh, we're going to break this, because I don't have a crystal ball. And neither does anyone else. And anyone that's telling you that they definitely know that you're going to break that, run away screaming, because they have absolutely no idea. You have a better guess of whether or not they're going to know the lottery numbers tomorrow. Okay, what you know is this is the hand you're dealt, and this is what you play right now. So if I come here and I look at the NASDAQ and I compare the NASDAQ to when we looked earlier, well, what do we have here? Okay, here's the 5, here's the 8, and here's the 3, and they're all moving right there. If I take a look at this in regards to the Qs and I get rid of the pre and the post, you'll note that we're not there yet. Futures are always going to move sooner. So what is all this telling us? What I need people to do is I need people to start being nuanced. Right? What you need to do is start being nuanced. I don't really care if you do it or not, but I would advise you to start being a little more nuanced. It's not as simple as we're going to crack, we're going to roll. If you are to look at this market and just go on the assumption that we're going to crack, when all we've done is not even retest the previous all-time high, I think you have more work to do. It's very difficult to just look at this and go on the assumption that, oh, the market's cracked, it's all over. You had one lower low. You had 1 week where it was bad. So I don't want to view it as that. Now, do we have some issues? Yeah, we've gone over those issues. We've gone over the equity risk premium, right? There's real issues out there, and we're facing a lot. But I think you have to look at some of the volatility that we're dealing with too. For example, this is an excellent chart. And what it's showing is it's just showing the earnings volatility out there right now. And what you're seeing is earnings day moves this quarter were 3.5 times 3.7, the average over the past 25 years. Well, why is there so much volatility now? Right? We saw this before. And when was the last time you saw this kind of volatility? And it's above the average, but it's not the same as like 18. See, first quarter of 18. Well, why is that? Well, I'm glad you asked. What you have to understand about this is Fed funds. And people say, well, what does Fed funds have to do this? Well, margin rates. So why would that period in time, right, have another pop? Well, look at margin rates during that pop. Same period of time. Okay. And where are we now? Same thing. Why? Because people are on margin and now they have to pay. That's why the volatility is the way that it is. And that's why the VIX is the way that it is. People are not used to the VIX doing nothing. And people are wondering, well, the VIX is broken with all this huge volatility. No, people are not used to actual real volatility because they haven't had to deal with it because of Fed funds, right? People just stayed on margin because it didn't matter. You weren't paying anything. You didn't pay anything for 18 years. Now you're getting a bill and going, what's that $1,300? And people are saying, well, now I'm on margin and I'm losing money. So you have to put all this together. And that's why the volatility is what it is. So when we look at something like the NASDAQ, oh, we're definitely going to crash. Are we? How do you know that, right? I don't know that. Did you know that Apple was going to beat earnings tonight? Someone will say in the comments, yeah, I knew. Okay. So the point that I'm getting at here is that we don't know what's going to happen. So instead of acting, what we need to do is be more nuanced. When we see signs that are telling us, yeah, this is a little exhausted, maybe what you do is just slow down and don't do anything. Maybe you don't need to be doing as much in here until you start to see how this is going. The best thing I can tell you is look at what the market's telling you. It's telling you that we're trading the first hour and we're trading the last hour. That's what's happening right now. Retail is being sold a bill of goods in the morning, and then the institutions are doing what they want in the last hour of the day. I mean, you couldn't see it any clearer. Let's take the NASDAQ. You can't see it any clearer than what you're seeing right now in the NASDAQ. Look at the end of Tuesday, the last 10 minutes. They're selling everything they want. They're getting retail all giddy and excited, and then they're selling to you. What did they do in here? They got you all excited, and then they're selling to you. Okay. Tonight was a little different, and that's what we're always looking for, patterns. And so what we're seeing that with the indicators that we just went over, right? So why are they changing today? I don't have a reason. Maybe they're exhausted. Maybe they're seeing something that they wanted to see. Maybe they knew Apple was going to do what it did. But what we have to do as traders is we have to take advantage of it. So how do you do that? How do you take advantage of that? I'm glad you asked. So I'm going to leave all these lines in for a second. We can all see that this is setting up to be a dragonfly. They're not going to buy the companies that broke and start buying them, meaning institutions. So yes, you missed revenue, period. You can argue it all you want, you missed revenue. You're one of the fastest growing companies in the NASDAQ and you missed revenue. The chances of this coming roaring back right now, I don't believe it unless there's a real reason for it, right? So when you understand this, you know that they're still going to sell. Now, they might close their shorts at the end of the day, which is what you saw here. But when you understand how this is playing out, you can take these pops to your advantage. And so we had two really good trades today. One was SMCI, where we were actually able to catch this because we saw what was happening here and we knew how to play it. The other one was options on the NASDAQ. And I'm going to go through that one on Saturday and how you can actually use the tick chart to do it. It's very simple. Anyone's going to be able to do it, but it's more in depth and I'm not going to have time this evening. So make sure you watch Saturday's video. And then if you just take a look at this, you can just see this was just perfectly set up. You want to have your resistance level set up because what I'm suggesting here with names like SMCI or any of these other names, you're going to be in a trading range at best with them. So if you're selling into resistance and you're buying into support, no matter which way you're looking at it, previous gap fills, etc., that's how you're going to be profitable. And it's going to happen way faster than you're used to. Okay, here, take a look at this. SMCIs are barely hanging on here. So let's short this. All right, we're going to short a little SMCI here. And you can do puts as well, but I don't think that I have to, get crazy here because it's a wild name. It could just go up $20, $30 for any reason, and I'm going to have to get out. There you go. Welcome home. I'm going to pull something out of it and leave the rest on. I can leave the rest on up to here, and it's basically a free trade now, and I'll just leave it on. So let's watch the gap fill and then go from there. So right into the gap fill, I'd like to close some. I probably should be thinking about it already. Yep, there it goes. So you're probably going to go right through this. I could probably actually add to that short. Do I really want to add to it? I'm just going to take what I got. Right into that, I'm going to trim. I'm in at 51, so I'm about $13, $14 on the short. Oh, good. We're killing it here. I don't really want to bounce here. Considering where I'm at, I'm up about 30 points already. I'm going to trim a lot there. And my stop is a 1 minute close over 37 on the rest. So I'm going to pull out a bunch right here. And my stop is a 1 minute close over 737.55. I'm down to less than half now, guys, on the SMCI if you're trying to figure it out. That's obviously the big winner for me. I'm up $40 in SMCI now. Okay, so now I've got a wick down here. What are you going to do? Is this where you're going to stop? Down here? I think that's enough, don't you? Yeah, that's pretty much there. What are you up? All right, up 35, closing the rest. 100% out of SMCI. Thank you very much. Thanks for playing. So this was something that we were able to profit from specifically because we had the levels marked off. Qs were the same thing. I'm going to walk through that trade on Saturday because it's more in depth. So when you look at this picture, does that mean that it's over for SMCI? I'm not saying that, and I don't want people to think that. What I want you to understand is maybe you're going to base in here for a quarter or two. If you remember, this is what NVIDIA did, right? And so in other words, what we're doing is we're being nuanced. Okay, this is when no one thought NVIDIA was ever coming back, and that was the end of NVIDIA, and NVIDIA's done, right? Remember this. It didn't go anywhere for 3 quarters. It worked into its valuation. What happened? Okay, from there, you went up another 100%. You have to give these things time. We saw this happen with AVGO. Here, that was it. It was never, ever coming back, right? That was it. You had to get out. You're never going to see that level again. You're up 50% from there. They have to work into their valuations. If you're missing numbers, you're not going to work into your valuations. It's just not going to happen. And then in front of that, you also have to realize that people were maneuvering because you had massive earnings tonight. Apple was a fun one because expectations were so low. It was actually pretty easy to play it after hours too. I married a put to it. I went long stock and married a put because the puts were so cheap. It was silly. The 170s were $2. You really had $2 of risk against stock that you owned. It was kind of crazy. And that's because the expectations were so low. Nobody really wanted to be involved with it. But they're saying here, total revenue up low single digits, significant investments in AI. They really didn't handle that question very well in the conference call. That's why this video is late. I actually had to listen to these calls and the coin call. Apple shares are trading higher. The company reported strong earnings, raising its dividend. $110 billion for repurchase. I didn't ever think I'd see that in my lifetime. 110 for repurchase. Isn't that crazy? What an amazing sum of money. And then they just kind of break it down, what's going on in the Americas, Europe, China, and what's going on with revenues, service revenues. The 110 is just staggering, but now everyone's going to get an extra 25 cents. Dividend, so you got that going for you, which is nice. And then they beat, and nobody expected to beat. Everybody thought they were going to miss and then lower guidance, and that's not what they did. And they beat. That's a big number, 90 billion. I mean, my gosh, just absolutely enormous. So anyway, you traded up after hours and you did exceptionally well. I would say that if you were in this after hours, it became pretty clear when this started to roll. What I always tell people to do when they trade these after hours is just do yourself a favor and you drop an anchored VWAP right there on the first bar. And as long as you're above that, you're fine. At the time of recording this, I've closed the entire position because I did really well with it. And then when they started speaking on the call, it started selling down. Right around that same time, you had your little spike in here when the CFO starts explaining how to pay for everything. But you can start seeing, like, as long as you're holding above that, 182 and 3/4 roughly, I think you're fine. We'll see what happens tomorrow, but we have other issues tomorrow that we're going to have to deal with as well. And not everybody was as great as Net. Net, for example, this was not what you want to see at all. So if you take a look at Net right here, Cloudflare, tanks, results, subpar guidance. It wasn't great guidance. They beat fairly decently. But when you start getting in the guidance and you're 393, 394, and your estimate's 393.4, it's not as great as what you're hoping for. You're at 164, 165, your estimate's 1653. So you're basically saying that we're going to miss our guidance. And then we're right here. And these stocks are not priced for that. They're priced for perfection. We went through this with equity risk premium and what's going on out there right now. So when you see that, they're just dumpster fires. That's exactly what happens. And that's exactly what you're seeing here right now. And when you start to see, you don't go near them. You don't bottom fish these. It's some other names that did this too, that are kind of cybersecurity, like FTNT. Like that was a little bit of a disaster as well. Now, coin. This is a really interesting one because of revenue. Now, they jumped on the revenue, but I think the revenue, to me, when I went through it, I think it's somewhat suspect on how they did it and how they came up with their earnings number. And I have not listened to the call at the time of recording this. I had 2 other calls I had to be on. And then I had to get this out, and then I also had to do some other work. But I want to listen to it, but it didn't really strike me as a beat that is sustainable. So I really want to dive into it and understand it. At the time recording this, I did short it. I'm not doing very well with the shorts, kind of like basically break even. I'm just sitting in all these ranges. And I want to see how this plays out tomorrow. This had a massive move into the end of the day. Absolutely massive. Let's clean off these levels so you can just see how you just jumped up there. I would watch this tomorrow solely because you got to the 55 and the 22, and you would have a bunch of people that are shorted, and you just went up $33 in a very short period of time in 2 days. So it's going to be real interesting to watch that one tomorrow and see how that plays out. The earnings in and of itself, if I had to say that the best way to look at them, we had Apple, and Apple crushed, and no one expected Apple to crush. Now, is that going to be enough for people to get involved in NVIDIA and to try to play NVIDIA over the 2255, that whole nonsense tomorrow? I don't know. I don't think really, quite frankly, that's our issue. I'll show you what I think our issue is. I think our issue is non-farm payrolls. We need to watch this very carefully. Now, what we're seeing with non-farm payrolls at 8:30, because we're so data dependent now, right, with the stool. I mean, everybody's aware of this. You're very data dependent right now, so you have to watch that. So again, you have macro, fundamental, technical, and then, of course, there's the top of the stool. And then this is the market and us trading. And then you have to worry about the macro more than anything right now, and whether or not because of the language. But that was the previous on non-farm payrolls. Here's the consensus. Here's the problem. The government wants everybody to look at things are going well, especially in election year. It doesn't matter who's in office. So last time they gave 71K jobs in government. Like, that's why these numbers are spiking the way they are. They're really coming in there. Out there and really hammering that home. If you look at manufacturing jobs, they were 0, and the consensus is 5K. Non-farm payrolls private, that was up. But that's not just all we have to worry about. You also have to come down here and focus on some of these other numbers. And I think that I actually think that this might even be more important to some extent. You have to watch this ISM services PMI. Okay, 52. This is a hot number. Global services PMI will come in sooner. Will come in at 9:45. This comes in at 10. You're going to want to watch this tomorrow. That's our driving force. I think that's going to set the tone. It is very good for the market that Apple came out the way that it did, and that might give us a lift. And we are grossly oversold by, if you look at those indicators we went through. That's it.